Welcome to Fairport Flash, the monthly economic update powered by the Fairport investment team. Our team gathers the most recent news, data, and research and distills it into the information most important to you. Let's get started.
Hello, and welcome to the March 2021 edition of the Fairport Flash. My name is John Silvis. I'm the Chief Investment Officer at Fairport Wealth, and I head up Fairport's 5-person investment team. Along with the team, we're responsible for the asset allocation, the security selection, and the daily management of client accounts. I hope everyone is doing well and staying healthy as we draw near the end of the first quarter of this year. So let's get started. Equity markets continue to build off last year's gains. So far, through March 15th, the S&P 500 is up about 6.2%. The ACWI, which is a global equity benchmark, is up about 4.9%. And leading the pack would be the Russell 2000, which is a good indication of small cap equities. It's actually up 19.5%, so almost 20% for the first quarter. On the flip side of that, the Bloomberg Barclays Ag, which is a measurement of fixed income or bonds, is down about 3.2% so far this year. But if you take a little further look back, if you go back to the March 23rd low, and we're almost at that one-year anniversary, the S&P 500 is up about 80% from that low. The ACWI, which I mentioned, the global index, is up about 79%, so about even. The AG, which is the fixed income, is actually up about 3.44%, so it's been positive for the last 12 months or almost 12 months. And the Russell 2000, or the small cap index, is actually up 138%, so it's definitely been leading the way. We really do expect the economic expansion, which started back the midpoint of last year, to continue into 2021, and we're seeing that through the economic readings that we follow. One of the ones we look at is the Atlanta Federal Reserve does a GDP Now survey, or econometric model, and right now it's indicating that the first quarter, which we're almost through, is up about 8.4% on an annualized basis for GDP growth. Most economists have anywhere from between 5 and 10% in the first quarter, and we think we'll be above 5% as we finish this quarter. But more importantly, as you look out for the whole year, 2021, most economists are revising their estimates up, and we should see growth of above 5% for 2021. Most of that hinges on the reopening in the second half of the year. Another indicator we look at as far as the economy goes is unemployment and the weekly unemployment claims. The unemployment rate itself has fallen to 6.2%. We expect that to fall further throughout the year, could even get below 5% before the year end. But the unemployment claims, which do come out on a weekly basis, have continued to go down, although not as fast as they were earlier in the year. And I think most of that's driven because there's a certain part of the economy, which is the hotels, cruise lines, restaurants, and those type of things, public sporting events, theaters, that just haven't opened up yet. And I think until we see that reopening, a lot of those people will remain unemployed. So that's kind of the last leg that we'll see. Another indicator that has been positive and goes back to that V-shaped recovery that we've talked about is the U.S. PMI numbers, which is the Purchasing Manufacturers Index. It's a good indicator of where the economy is going and a good sentiment indicator of the mood of the economy overall. And that's actually up above where it was in March of last year. So that's a good indication that the economy continue to recover and most likely will continue to expand as we get into the second half of 2021. One of the areas we see doing well and continue to show leadership is the small cap stocks, which we mentioned a little bit earlier with the Russell 2000 index. Small caps have led off the market bottom in last March and have continued to do that. We believe there'll be leadership throughout the rest of the year, although probably not at the pace that it has been over the last 12 months. We expect to see further gains on a relative basis going forward. Overall, we do think the breadth of the market looks pretty good, and equity markets continue to gain strength going forward. There was a study done by LPL Research that goes back and looks at whenever the market sees a return of above, call it 2.5% gain, and the markets overall are trading above their 200-day moving average, which doesn't happen as much as you think. Equity returns tend to be pretty positive going forward. So that's a good indication of market sentiment out there. And currently, if you go back and look at it, over the last 10 times that's happened, 6 months later, markets have been positive by 11% every time, and 90% of the time they've been positive a year later by about 15%. I'm not so sure we'll see 15% returns, but it is a good indication that equity markets are in pretty good ground and actually are looking to pick up steam as we go forward. One of the areas we do have some concern about is valuations. Valuations are high. There's really no way to put it otherwise. We've seen most of the returns last year driven by multiple expansion, although we think this year it's going to be driven by earnings. We do expect multiples most likely to come down. We finished at the end of February with forward PE ratio of about 21.4 times earnings. We expect that probably to consolidate down to around 20 times this year, perhaps even a little lower than that. But we do think most of the returns have been and will be driven by earnings expansion. And as we always say, I think when the economy is doing well, corporate earnings do well. And we've seen that so far, and corporate earnings are growing. And then when corporate earnings are growing, that tends to be good for markets. And so far that's held true, and we'd expect that to play out throughout the rest of the year. Again, if there's one area that's probably not played the way we thought it would be the U.S. dollar. The U.S. dollar was depreciating for most of 2020 last year, but we have seen the dollar start to appreciate this year. Could just be consolidation, but something we're keeping a close eye on. As we've seen the dollar start to strengthen in here recently over the last month or two, that's actually put a little bit of a damper on international equities, specifically emerging markets. Still positive for the year, but have retreated on a relative basis. Something we're keeping a close eye on. I don't think we're throwing in the towel yet as far as dollar weakness goes, but it definitely has not played out so far this year the way we thought it would. So as we head into the summer months and everybody are getting vaccinated, we do think there is going to be a point here, probably sometime in the second half of the year, where we get to that herd immunity point. And I won't try to just define that. Everybody has a different view of what that is. But I think people are going to be out and about, and you're going to see more people going back to doing things that they haven't done for the last 12 months. I will tell you, just as a piece of advice, and I think this was a timely advice given on TV recently, I think it was on CNBC, they said if you want to book a flight for Thanksgiving, you should probably do it now. Reason being, people are flying more. In fact, TSA traveler throughput, which is counting the number of people that go through TSA checkpoints every week, have actually gone up. We're almost back to pre-pandemic levels. So I think people are ready to get out and about, and we should see that. And as more money goes into consumer pockets through the stimulus, people will go out to spend that, and people will, I hope, return to what will be some sort of normalcy out there. That brings us to the conclusion of March's Fairport Flash. As a reminder, our goal at Fairport Wealth centers around inspiring families. And as a member of the investment team, we strive to do this through a long-term diversified approach. If you would like to discuss any of today's topics in more detail, please reach out to your Fairport team. Thank you again for listening, and keep an eye out for the Investment Town Hall in April. Thanks, and have a great day.
Fairport is a group of investment professionals registered with Hightower Securities, LLC, a member of FINRA and SIPC, and with Hightower Advisors, LLC, a registered investment advisor with the SEC. Securities are offered through Hightower Securities, LLC. Advisory services are offered through Hightower Advisors, LLC. This is not an offer to buy or sell securities. No investment process is free of risk, and there's no guarantee that the investment process or the investment opportunities referenced herein will be profitable. Past performance is not indicative of current or future performance and is not a guarantee. The investment opportunities referenced herein may not be suitable for all investors. All data and information referenced herein are from sources believed to be reliable. Any opinion, news, research, analysis, prices, or other information contained in the research is provided as a general market commentary. It does not constitute as investment advice. Fairport and Hightower shall not be in any way liable for claims and make no express or implied representations or warranties as to the accuracy or completeness of the data and other information, or for statements and errors contained in or omissions from the obtained data and information referenced herein. The data and information are provided as of the date referenced. Such data and information are subject to change without notice. This document was created for informational purposes only. The opinions expressed are solely those of Fairport and do not represent those of Hightower Advisors, LLC, or any of its affiliates.